The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 9:06 a.m., 24 minutes to go until the start of trading, and they're already trading, folks, to the upside. We got some inflation data this morning. We got weekly jobless claims. Inflation, a little bit more than the market was looking for, but nonetheless, we got higher prices right now at the S&Ps. You plunged down to 4207 initially on that number. We're back at 4231 right now in the S&P 500 futures. You're pushing right near all-time highs. I believe that all-time high, you're looking at 4238. Let's put it in. There it is, 4238. Those highs made in the futures May 10th. Today, June 10th. And we're right up near that level. Markets finding a bid right now on that inflationary data. We'll get into it in a moment. You got the Dow up almost 150 points, 34,582. The Dow, easy number to remember, 35,000 on the dot on the futures for all-time highs. You got the Russell catching a bit as well, up 6 points or 0.3%. Tech stocks up 18, call it 20 points, 13,834. We're about 100 points off of the flash low we had on that inflationary data. Bitcoin, talk about catching a little bit of a bid from the lows of Tuesday. We were pushing 30,000 handle. How about we just had a 38,000 handle within the last couple hours? Bitcoin trading 37,720. You got the crude market back above $70, $70.31. Gold right now. Check out that move in gold. You have gold at $18.94. We were just at $18.75, and we'll jump to notes and bonds. Because, folks, we got a little bit of a lower price. Higher yield right now. You're talking about a yield in the 10-year, 1.52%. We were flirting with about 1.49 yesterday. We got a little bit of a pullback on the yields. We're up to 132.29. As of early yesterday, we've backed off. We're sitting 132.15 right now on the yield on the 10-year. We'll jump over to the volatility index, the VIX. Right now, sitting with a 16 handle as this market, no matter what, folks, just charges higher in a big way. The S&P's up 12, NASDAQ 100 up 16, and we get the VIX pairing its gains. VIX right now under 17, trading at 16.98 with 21 minutes to go until the start of trading. And let's get into that CPI data. So the headline numbers you're going to see there today, CPI rises the fastest since 2009. Fanning fears of inflation. Not too many fears as the market charges higher. Consumer price gauge increases 0.6%. You have the core measure up 0.7%. All right, as they put it here, gains reflect further advances in vehicle prices. Those vehicle prices, man, I think I was looking at, I think it's 7% month on month you had for used vehicles. Boy, if you're in the used vehicle market, if you're a buyer in that market right now, that is a tough market to be in, folks. In a big way in terms of where you are in that market and what's going on. What else we got going on? Jumping around, consumer prices. We'll pull it up here right now. Core CPI, excluding food and energy. You're looking at the bars here. The CPI data month over month, looking at the bars here. When we get into the numbers, so consumer price indexes climbed 0.6% from the prior month. You had a 0.8% jump in April. That's the largest since 2009. So when you exclude food and energy, we know that crude's been climbing in a big way. Core CPI rose by a larger than forecast 0.7%. Now, when you get into the yearly numbers, compared to the same month a year ago, you have the CPI jumping 5%. That's the largest gain since August of 2008. Now, it's interesting comparing it to a year ago, right? A year ago, you're looking at May. Still kind of some tough situations going on with COVID, of course, to compare it on a yearly basis, but just mammoth numbers when you compare it, though. We're not talking about 2% inflation, folks, which is the Fed's long-term target. Okay, we're talking about 5%. The CPI data jumped in there, and the core measure rose 3.8% from 12 months ago, the most since 1992. So if you take out food, which we all know is rising, if you take out energy, which we all know is rising, you're still up 3.8% from a year ago, the most since 1992. However, underscoring the clear acceleration in inflation more recently, the CPI over the past 3 months has increased at almost a 7% annualized pace, the fastest since 2008. Now, the other side of that, you got to take into consideration, folks, that there is some transitory variables going into this equation, as in the used car market is not going to continue to appreciate and rise with prices at the level of 7% month over month on a consistent basis. Not going to happen. That will come back to earth once everybody, I guess, restocks back up on the used car market or whatever's going on. We know that chips are affecting new cars, so maybe the used car market experiencing greater demand because there's not as many used vehicles in the market. It makes sense. It does not make sense to the tune of the prices that you're seeing in those markets, though, and I don't think they'll hold. But when you talk about we're averaging right now almost 7% annualized pace over 3 months, fastest since 2008, at a time when the goal is still 2% for the Fed. Okay, they are going to allow on a transitory basis that number to climb above 2% as long as 2% will be what they achieve in the longer term. You start seeing these numbers persist, and the transitory angle on things is going to be a little bit more difficult to spin as we get some pretty staggering numbers across the board. You have yields, as we talked about, rising. You got 1.52%. Robust demand as they get into it. Strong consumer spending on merchandise. Stimulus in the equation, of course, led to growing orders, backlogs, and lean inventories. This is going to fade as well, right? Stimulus is not going to be there. Now, there's varying parts of this. I talked about this earlier in my show. I think it was early this week. Bank of America, their CEO, Brian Moynihan, he was talking about that people have between almost like 2/3 to 3/4 of their stimulus still remaining as savings in their checking accounts. They still have 2/3 to 3/4 of the stimulus they received available to spend in their accounts. So it's not going to wane just yet. Keep that in mind when you look at whether this is transitory or not, that consumers at Bank of America at least had only spent about $1 out of $4 or $1 out of $3, somewhere in that range, of the stimulus they received. Pretty much saying there is a substantial level of stimulus still sitting in people's pocketbooks that they will be able to spend, which will be a constant theme that will play into things on the inflationary front. I mean, I was chatting with friends earlier today saying, what happens, okay, if inflation persists at a dramatic degree, which is at least happening right now, and jobs don't come back to the tune of what Chairman Powell wants, okay? Chairman Powell has emphasized continually, and probably rightfully so, that he's not worried about the stock market, okay? His mandate is full employment. The Fed's mandate is full employment, and we need to make up about 8 million jobs until we feel comfortable getting back to full employment, because that's what we were at about prior to COVID. Well, the world has changed. Those 8 million jobs might not be coming back as quick as we all hoped when we provided stimulus to these companies in terms of paycheck protection program, et cetera. The idea was you keep them available, you turn the key. Once we get the vaccines and we open back up, those restaurants are able to literally turn the key, open the doors, bring back the employment, and open back up in a post-COVID world. Things have changed, folks. Life isn't going back to the way it was in terms of how you have people, maybe just the life they were living. Maybe they're not happy being slaves at their desks, so they're transitioning to different employment. Maybe you have people who were close to retirement, don't want to be on there anymore. As they're saying in the den, tons of low-paid workers changing careers. There was a real number in there in terms of you had a period of 12 to 16 months where you got used to a different kind of life. I'm not sure those 8 million jobs are coming back pretty quickly. And what happens if we have rising rates because of rising inflation? Fed has to tame the stimulus, and we haven't made up the jobs yet. What does the market do then? We'll find out. We got a lot more to get into, folks. Weekly jobless claims. We'll be right back in 3 minutes.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and the relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps up 13 points right now. NASDAQ 100 up 22. The Dow up 150 points. Russell up 7 points as well. We just went over that CPI data. Inflation, it is here right now. Whether it's going to stay, that's the conversation. Let's jump over to our man, Kevin Hinks. Folks, every trading day, 11 a.m. Eastern time, live on Tiger TV, Fast Market by the TD Ameritrade Network. Kevin Hinks, Alex Coffey, and the team breaking down hypothetical trades, comparing equities, setting up trades, trade management, the whole deal. And we got a nice morning of action right now coming into things with two economic numbers. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. You know, the knee-jerk reaction to this number may turn out to be much different than the long-term reaction to this number. And I think because when you saw the numbers come out, 0.6, 0.7, you saw, you know, a little move in the markets and in the bonds. But when you dug into the numbers, Tommy, and realized that a third of this number was used cars and trucks, up 7.3% for the month, you start to realize that some of these, Jerome Powell basically can explain some of this away as being temporary, right? Food was up 0.4. That's the same as April. Energy was actually unchanged for the month, with decline in gas prices, but increases in electricity and natural gas. So all things considered, and I think futures are representing that, a little hesitancy yesterday afternoon and right when the number came out, but now I think it's a clear path here now to new highs.
Remarkable action across the board, man, for sure. We're within about 6 points right now of all-time highs on the S&P futures. I got the Thinkorswim platform up here. We're sitting at 42.32. All-time highs, I think we got 42.38. The Dow within about 400 points of that mark, 35,000 on the dot. And, yeah, really interesting, Kevin, right? 7.3% jump in the cost of used cars. And, folks, that's right. on a monthly basis. And last month's number, Kevin, was staggering, I think, as well. Wasn't it like 10%, something, staggering? So month over month, just huge. It's not something that I think I'm sure, folks. Used cars ain't going up 7% every single month. So that's what Kevin's talking about. Yeah, it just can't happen.
This is something that just reflects the crisis going on right now in the car industry with semiconductors holding up the production of new autos. So used cars have jumped in price, and everyone's trying to get used cars. And so I think that's something that eventually, you already saw in the news that Ford has restarted production. in some of their lines. So that's something, you're right, Tommy, that I expect to work its way through the system in the next month or so.
It's a tough time to be a buyer in the used car market, man. If you can wait, I would wait, folks, because, boy, that is some staggering numbers across the board. We got weekly jobless claims number at the same time, Kevin, 830, decent number, under 400,000 again. Real wages they went into. So, one, I have Bloomberg up here, and they're saying, wage growth's going up, but inflation adjusted, of course. Now, this ties in, though, inflation adjusted, looking at those numbers we just talked about, folks, that tie in the craziness going on in some of the markets. But declining 2.2% in May, dropped 0.1% in April. What I'm trying to wrap my head around, Kevin, is it's going to be interesting to see. We know that Chairman Powell can definitely say transitory right now because all of these influencing variables we just talked about are there in a big way. How long do they persist for? Do we make up those 8 million jobs in any time soon? Do we make them up before Chairman Powell really has a struggle to kind of explain away if some of these numbers persist? But like you said, man, the market's taking it and it's flying. We got the yields right now. I think we're talking about 1.52% on the 10-year, a little bit of a rise, and the market's pushing all-time highs. Jumping around to some of the equities. So GameStop last night, they come out with their numbers, down a little bit on that, 283 from about 310. Still pretty remarkable, the lofty levels we're sitting at in some of these Reddit meme stocks. Of all the things talking about today, Kevin, what are you guys going to be talking about on the program coming up at 11 o'clock today?
So on today's show, we do have one good earnings release coming out after the bell. Chewy, that's the online pet food seller. So they'll have earnings after the bell. We'll cover that. And then we'll trade Microsoft and we'll trade Amazon. Two big boys today.
I'm not familiar with those two stocks, Kevin. Microsoft and Amazon, both of them?
Yeah. So we'll have some fun today as we get to that level where earnings are starting to thin out a little bit.
I look forward to it, man. I have Microsoft and I have Amazon. Everybody's probably got them if you have any type of an ETF or an index in your portfolio, folks. Microsoft, talk about a juggernaut, man, accelerating higher. We got 253 today, all-time highs 263. I'll really look forward to that Amazon conversation, Kevin, because I love looking at that stock. Talk about a consolidation, right? Amazon back July 6th, we reach a high of 32.15. Well, it's June 10th, and we're trading at 32.81, man. We're almost pushing a full year, Kevin, of this consolidation between about 3,000 and 3,500. Some pretty round numbers up there. We're sitting right in the middle of it at 32.81. And, of course, we look forward to the conversation at a time when we get the VIX pairing some of the gains as well, right? 16 handle, 1693 handle on that volatility index. And before I let you go, Kevin, we're going to jump over to Chewy. I'm going to pull up the Analyze tab. That's a decent move. So we got a $5.39 move for only a $77 stock, folks. And if you don't know what we're talking about, tune into the program. Kevin Hinks, the team, they go over the expected moves, the implied volatility for those option chains, and what we'll be looking for this afternoon. Well, Kevin, we look forward to the program as always, man. Should be an interesting market day overall, period. See where the market goes on the open. And we're going to be pushing all-time highs right on that opening bell this morning, man. We look forward to the show, Kevin. We look forward to the coverage and the education as always.
Thanks for having me on, Tommy. Have a great day.
You too, Kevin. Take care, man. Folks, tune in an hour and a half from right now, 11 o'clock. Great program. You can learn a tremendous amount, especially on a day where we have some market action going on in a big way. All right, jumping around to some of the stocks. So let's check out some of the tech stocks as we kick things off. We talked about Amazon. Amazon this morning, they're up about $5. We'll put it back on a daily as we await the opening bell. And I talked about their consolidation. Microsoft right now, you're up about $1, waiting for the open on Microsoft to 254. Google is just on another planet, folks. Google's trading at 24.91 right now. Putting this on a 15-minute to see the move. Yes, 24.91 was the last print. 24.98. We reached above 2,500 yesterday. Just an absolute remarkable acceleration in this company. You put it on a 3-year weekly, that thing's through the roof, right? We'll put it back on a daily just to see the run we've had. Now, if you recall, I mean, talk about a short-lived pullback of anything to do with antitrust fears at all. I mean, I remember back, whether it was late last year, you had quite a little pullback from 1,700 down to 1,400 and change, give or take. We based around 1,800. But since then, folks, the channel defines itself. I mean, check out this channel line that we're in Google, and you're trading to the upside. And this thing shows no sign of weakening at all with Google shares trading. And again, we're going to be basically flat. But, man, just YouTube's in a world of its own, folks. I love YouTube. TFNN, everything we stream it through YouTube. We're not the only ones on the planet that do that. And we're all changing the way we consume content. I have a bunch of different YouTube channels. TFNN is just one of them that I watch all the time, and I love consuming content via that. I have, whether it's you're focusing on finance, whether it's you're focusing on your health, whether it's just you're focusing on certain people that you like, whether they have interviews, guests, YouTube. It's just an endless amount of content. It's huge with people of the younger generation. Unfortunately, I don't consider myself part of that generation anymore, as I'm in my 40s, but I still consume it. So it just speaks to the broad spectrum of people that they are able to reach with their content, and the charts show it, man. I mean, they are just the amount of ads they get to sell, the amount of ads that I watch on a daily basis from watching YouTube videos alone. It's just remarkable, and it's not going to slow down. All right, folks, we'll be coming back with the opening bell. Stay tuned. We got markets right near record territory. We'll be back in 3 minutes for that opening bell. Stay tuned.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and we got markets continuing to accelerate higher with the S&Ps within about 3.5 points of all-time highs on the futures right now, trading up 16 points at 42.34. You see the plunge we had to negative territory to kick things off. The headline numbers that you will see reported in just mainstream headline news, core numbers, CPI through the roof. But when you get into the nuts and bolts, the used car debate, it's going to persist, and rightfully so. When you see the used cars have a 1/3 impact on the core CPI, folks, everybody's not buying used cars. So you see the CPI data number. That number is what, 5% year over year, something like that. The core number was 3.8% year over year. A third of that increase having to do with used vehicles not impacting everyday Americans, which is why you probably see, again, the ability for Chairman Powell going to be able to spin this away as transitory, maybe rightfully so. That's the debate that's going to rage on and going to persist in a big way. But nonetheless, we got markets in positive territory. You got to listen to what the market's telling you, folks, because the market, give or take, it's never wrong. The price it's telling you at. We got the 10-year right now sitting down about 10 ticks at 132.15. We had an initial plunge all the way down to about 130.10. We're sitting about 132.15 right now. All right, let's jump around. We got weekly jobless claims also at 8:30 this morning. So Pennsylvania, California lead the drop in initial applications. Biggest drop since March. The number we're at right now, 376,000. So we have a decrease by 9,000 to 376. You see it on the chart. We were looking for 370. Okay, so pretty much just in line. You start talking about 5,000 or 6,000 jobs, folks, on an initial jobless claim basis. Not that big of a deal compared to what we're dealing with economy-wide, right? The number that people keep throwing out there is 8 million jobs. Now, here's what to consider. Okay, we know how many people were on the non-farm payrolls prior to COVID. You go back to February of 2020. To get back to that number, I think we're probably close to 7.5 million jobs, something like that right now, to get back to that number. But we are now 16 months after that date. Okay, in a normal society, you have population growth, which is what we have. You would have job growth, which is what we would have had. Okay, so the number to make up to get back to a quote-unquote full employment situation is actually far above the number we were at last February, right? Because you have to account for 16 months of what would have been job creation had COVID not hit. So it's a number even bigger than 8 million jobs that need to be added, okay? Now, continuing claims for ongoing state benefits fell by 258,000 in the week ended May 29th. Continuing claims, a one-week lag versus initial jobless claims, okay? So we got initial jobless claims for the week ended June 4th. Continuing claims are only updated as of the week prior, ending May 29th. Biggest drop since mid-March to 3.5 million. So you got 3.5 million on continuing claims. The number of layoffs has abated considerably since the start of the year. More Americans get vaccinated. We're all familiar with that. So decent numbers in there in the big way. Enhanced benefits are set to expire June 12th. Yeah, so half of states have recently announced plans to pull federal enhanced unemployment benefit program amid a debate over whether generous aid is making it more difficult for employers to hire. It's a legitimate debate, folks. Legitimate in a big way, all right? There's a lot of people out there, if you're on the lower end spectrum of wages, where, and especially if you're in states that have good unemployment benefits, Florida, not that great unemployment benefits, but still in Florida, add $300 a week. And there's a lot of people that really competes with the wage they may have gotten if they got back in the workforce. Understandable. What's going to happen, though, you're going to see those states go away. Okay, half of states recently announced plans to pull them. Enhanced benefits set to expire June 12th in Alaska, Iowa, Mississippi, and Missouri. Those states all saw decreases in claims ahead of this Saturday's expiration date, and as we said, led by Pennsylvania and California. So we'll see. It'll be informative, right? When we see these enhanced unemployment benefits are going to go away, and if that is the reason why there was substantial reason for people not to come back to the workforce, okay, yes, it's a variable in play in some degree. The real debate is how much of a degree. We know it exists. We know there are people out there. We probably all know somebody in our life, a friend or a friend, an acquaintance, somebody you've heard of, who is in that situation. They've said, hey, I'm collecting, $16 an hour practically, doing nothing, okay? But here's the question. So I'm not going back to work. But is that really what is driving the real trend here that's causing payrolls to stay low? You add in April and May numbers, and we added on a non-farm payroll basis less than 1 million jobs. Remember when we were talking about April? The whole talk was, maybe we'll have 1 million with some of the estimates for April. I think we came in at 266. We just got May last Friday, and what was that? 5 something? You add them up, we're not even at 1 million, right? A lot of people are saying that is because of those enhanced unemployment benefits. Well, we're going to find out, folks, in the next month or two. Or 3, right? The next 3 to 6 months, you got to love being in the market at this time, folks, because there's so much uncertainty, which is creating a little bit of volatility. And there is so much uncertainty that's about to have some clarity over the next 3 to 6 months, because the Fed is not going to be able to look at numbers like this and say transitory if they persist for 3 to 6 months. And the market's not going to be able to rationalize away job misses. Okay? They're not going to be able to rationalize away job misses at the same way. And here's the kicker. We got inflation. We have rising inflationary prices. We have the housing market pulling things up dramatically. And you have real wages. Okay? The one part I want to get in here, you have real wages declining. While wage growth has blown past economist estimates in the last 2 monthly jobs reports, a rise in consumer prices has taken a sizable toll. Again, how sizable? Because of the influences on the consumer prices, like the used car market, okay? But inflation-adjusted average hourly earnings declining in May after a drop in April, okay? So you're seeing a lot of businesses say we can't hire people back, okay? Those businesses, you can't hire people back at the same prices that you were paying 16 months ago, folks. That's not how it works, okay? Because most of those businesses are raising their own prices because maybe their costs are going up. So guess what? The employees need more money just to have the same wage. So that's the debate that's getting lost here, okay? They're talking about that they can't hire anybody back because they open up these jobs at the same price. Meanwhile, we have rampant inflation across the board. We have inflation-adjusted average hourly earnings dropping, okay? And so we have people saying, hey, guess what? You know, I might have worked that job for $13 an hour 16, 17 months ago, okay? But that ain't going to cut it right now. They're going to demand more because that same restaurant, that same business is charging more for the products that they offer because they have to pay more for the cost of good. Well, guess what? It translates to the consumer needing more money, so it translates to the consumer demanding more money from the wages that they'll be paying. That's an influence in there too. Now, I've stated the variables. The only question is, which one is more of an impact? Okay, which one is more of an impact in terms of does this normalize when you take out those enhanced unemployment benefits? We're going to find out, folks, and we're going to find out in the next 3 to 6 months. And the debate will settle itself once we see when those are taken away, do people come running back? We're going to find out. We're going to find out like right now, which is pretty cool. And you get to be a trader in the market as we experience the volatility persisting across the board at a time when we got S&Ps at all-time highs, folks, 42.45. Check out that acceleration. Stay tuned, folks. We'll be right back after the break.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks, and just like that, we get the S&Ps pushing 4250. We get the S&Ps up 28 points right now, all-time highs you're looking at. We get the NASDAQ 100. We're right up near that level. You're talking about only about 150 points from all-time highs, 13,912. The Dow about 300 points from that level, 34,696, all-time high 35,000. And we take a look at the Russell. Russell, you're only talking about 30 points as well. We could realistically get all-time highs on all four indices today, folks, if we get an acceleration higher. And you put it on a 15-minute. Things are just not stopping. Look at that strength in the S&Ps in a large way, trading higher. We'll jump to Bitcoin real quick. Bitcoin, pretty interesting action, hovering right near 38,000 this morning. Crude, look at that acceleration. Crude trading at 70.58 right now. And you jump to gold. Gold contract spiking a bit on that inflationary data up to 1896. We're trading at 1892, and you got to keep notes and bonds on your chart, folks. You could check out the acceleration we have on a reversal. You got the 10-year right now sitting at 1.5%. We were as high as 1.52. I mean, giving it all back, remarkable, right where we were before that number in terms of the 10-year sitting at 132.2. And this looks like a point, folks, that is just stuck at. You put this thing on a 3-year weekly. I've talked about it many times, but if you're just watching the show for one of the first times, this is a 3-year weekly. You go from October of 2018 up to the highs of COVID, March of 2020. You pull back to a 382 of that number. You're looking at a 382 of about 131.24, okay, which correlates to the highs we had back from September of 2019 and October of 2019. So that area was resistance. That area is now turned into support, I would say, on the 10-year as we've bounced. Anytime we've come down there, you're sitting at 132.20 right now, hovering just above that area. All right, what else we got going on? Jumping around to Microsoft. So, fast market. They'll be talking Microsoft and Amazon today after the bell. Look at this acceleration in Microsoft as we have tech stocks trading higher. Microsoft, is that an all-time high? I think it might be. Nope, not quite. Excuse me. You're about $6-7 from all-time highs. Now, Microsoft. This is an interesting one. I used to have an Xbox myself. Haven't gamed in a while. Probably a good 10 years or so. But Microsoft, it just seems like the natural transition of things, right? They want to be able to offer Xbox gaming on TVs without the Xbox. Why not do it, folks, right? Xbox gaming subscribers spend 50% more on games and content, up from 20% more last August. But what they're trying to do is they're trying to work with new hardware and deals with TV makers that will let people play games and experience Xbox without needing to buy a gaming machine. My head went to right away, of course that's where we're going. Because imagine, do you remember in the early days where you needed a Roku or you needed a smart TV device, right, to plug into one of the inputs on your TV? We still use them, of course, Apple TV, Roku, etc. But then what started happening? All the TV makers said, hey, we're going to make smart TVs, all right? Now, a smart TV, folks, just so you know, they buy the cheapest smart TV device out there. They put it in there. Sometimes it stops working. I think it's Vizio is one of the companies. I have a TV. They're good TVs, but the smart TV devices in there, people don't normally buy them for the raw power of them, as in they're on the cheaper end, right? If you're buying a smart TV, most of the time, one of those devices that you have within the television is on the cheaper end. So maybe you go buy an Apple TV, high quality, you plug it into one of your inputs. Nonetheless, it makes sense. So smart TVs, it's just going to be the same thing. There's no reason why the technology of an Xbox can't be placed within some TVs. You're going to buy a smart TV, and guess what? That smart TV no longer just patches right into Prime, Netflix, Disney. It also patches into Xbox, and you can game right on the TV itself. Here it is. The idea would be to embed the Xbox experience directly into an internet-connected TV with nothing else needed except for a video game controller. We're already there, folks. It's just adding the technology, and they did the same thing with smart TVs that they're going to do here. Yes, it's probably going to be added technology, all right? But we all know the cost of technology continues to come down. I mean, do you remember what TVs with flat screens used to be? Now we're going to have a flat screen with an Xbox built into it. It's coming, folks. It's coming. Xbox building streaming devices to enable cloud gaming service on any TV or monitor. The latest Xbox consoles released last fall remain in short supply. Not surprising. Cloud gaming, truly a breakthrough experience. That's the CEO in a video by Microsoft Thursday. It's a really fast, easy way to get into gaming. I wouldn't be surprised, folks. And Microsoft, not necessarily on that news, but up about 0.9% with the market this morning at about 256 so far. All right, let's take a look at some of those other streaming stocks. Amazon to the moon. Why not? Up more than 1% at 33.15 right now. All these tech stocks, folks, accelerating. We're continuing to run. You're going to push all-time highs right now. We get the NASDAQ 100 now pushing 13,940, continuing to accelerate higher. Let's check out Google shares. Google was the one making all-time highs, 25.16. We'll take a look at Facebook. Not quite the same deal. Facebook back at 331. Microsoft, Google. Let's check out Netflix. Speaking of streamers, backing off a bit. Disney, one of my favorite. We have some Disney in my newsletter, up about 0.3%. Uber up about 0.3% as well. Let's check out some of the cannabis stocks. Canopy, a little bit of a run recently from 24 up to 26.50. We're flat today. Tilray, down about 3% after being at 23.04 yesterday. Aurora will pull up. Aurora down about 1.5% right now as well. All right, jumping around to what else we got going on. So Goldman, where's my story? Where am I? I had it up here. Where am I? Did I pull it down somehow? There it is. Goldman. So they're going to be finding out who, as an employee, is vaccinated or not as they look to make their offices as safe as possible. So employees for Goldman Sachs must inform the bank by noon today of their status, according to a memo. Last month, Goldman told its workforce that they should be ready to return to the offices in the U.S. and the U.K. by June 14th. Registering your vaccination status allows us to plan for a safer return to the office for all of our people as we continue to abide by local public health measures. I mean, folks, you're seeing it because these businesses need to operate. If they have an outbreak in an office, that's going to hurt their earnings. It's going to hurt their shareholders. It's about the business. Unfortunately, this has become political. We all know it has. It shouldn't. If you're able to get the vaccine, folks, I encourage you. Get out there, get the vaccine. It is safe. It is effective. I have a newborn at home. There's a bunch of kids out there that don't have the ability to get vaccinated themselves. It's really easy to say, hey, don't worry about me. You get the vaccine. We'll all be fine. Not the case. Not the case at all. All right. All right. I have a child at home. They can't get vaccinated. It's really unfortunate. We have so many people in Florida that are running around that won't get the vaccine. And it's selfish. It is. I'm just going to say it, folks. It is. Because they are not caring enough about the people around them. Say, I'm going to do what I'm going to do, and everybody else is going to have to deal with that. Well, you can do that. There's consequences of that. As in myself, my son, I don't want them hanging around with people if they've chosen not to get vaccinated. Folks, you have necessary risks and you have unnecessary risks. At this point, we're crossing that unnecessary boundary, unfortunately. So hopefully we persist, and you get it if you can, and we get over this thing once and for all. All right, this market, folks, it's not stopping. We got the S&Ps right now up about 28 points at 42.46. We'll jump to the VIX as this market just accelerates higher. We got 1664 on the volatility index. Gold contract right now, checking out gold flat at $18.95. Stay tuned, folks. We got one more break. We'll be coming back right in 3 minutes to finish up the show. Stay tuned, folks. We'll be right back. 3 minutes.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Right now, we got the S&Ps continuing to accelerate. We're up 29 points right now at 42.47, folks. It's not stopping right now. We're only 24 minutes into the trading day, and markets just accelerating in a big way. We got the tech stocks 13,946 and the NASDAQ 100. The Dow up 250. Russell giving it up a little bit at 23.26. And that is, as we see, we check back in on notes and bonds. How about a complete reversal from what we did at 8:30? Remarkable. We're actually above where we were at that price point. We're trading at 132.24 right now in the 10-year, and that's going to correlate. We're right back to 1.49%, folks, just like that. Forget about 1.5%. Not happening. Jumping around to what else? We had GameStop earnings last night. GameStop sliding a bit this morning. We're down 10.7%. Talk about some volatility recently. So they actually had to report actual fundamental numbers last night. And what did they come out with? Not really that important. What I want to talk about is that they're taking some Amazon execs. I'm a huge Amazon bull in a big way. Can't find probably some better executives. That's probably what you have Cohen out there, the new chairman, in terms of what they're doing. So they got a new CEO and a new CFO, Matt Furlong and Mike Recuperero, maybe. Nonetheless, looking to shore up their executive stable as they look to turn that company around. The volatility continues on GameStop, down about 10.5% today. All right, folks, what we got coming up at TFNN next Wednesday, 6 days from right now. Dave White, You can check him out every trading day at 2 o'clock p.m. Eastern Time, folks, for his program. You can check out any of his services. So June 16th, he's going to be doing an options webinar, folks. I encourage you to check it out. You can sign up for any of his services. His daily newsletter, Path of Least Resistance, his weekly newsletter, The Technology Insider. You can find both of those under the newsletter tab on TFNN, Path of Least Resistance or Tech Insider. You also have under the services tab, the Art of Time and the Trade charts. If you already subscribe to any of those, you're going to be signed up free. You'll be able to attend next Wednesday, 4 to 5 p.m. Eastern Time. It will be archived, folks, so you can attend it. You can watch as many times as you like. Everything comes with a 30-day money-back guarantee. I encourage you to sign up now, start attending, start subscribing to the newsletter.